Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're going to be talking about a new SPAC to the channel, and that is DMY. So I fucked up. So I was filming two videos at once, both of which have very similar tickers, and despite warning you later in the video not to get them muddled up, I've got them muddled up myself. So this video is about DMYD, not DMYT, DMYD. And now you also know what video is coming soon as well. I've tried to edit it correctly for the rest of the video, but please excuse anything. DMY Technology Group. Now there are a lot of things to be excited about this opportunity, and if you missed out on LCA or some of the other SPACs and you want to get into one at an earlier stage, then this perhaps is one for you. In this video we're going to cover everything we need to know, all the positives, the negatives, and the things that we need to learn more about. And in this video we're going to talk about a couple of things which I haven't seen anyone else talk about, but which are so important to the overall investment thesis, so you definitely don't want to miss those. We have on this channel before covered a number of SPACs before they've had that huge growth in share price, and I also have some exciting videos coming for you looking at other SPACs which are still fairly under the radar, so make sure that you smash that subscribe button so you don't miss those. If you like the video, please smash the like button, it's so helpful in pushing the video to a wider audience. And as always, I'm not a financial advisor, this video is purely for educational and entertainment purposes only, but let's get straight into it. So recently, DMY Technology Group, ticker DMYD. Now don't get confused, they have some other SPACs as well, but in today's video we're talking about DMYD. Recently announced its intention to merge with Genius Sports Group. Now there's been a bit of confusion around this, but Genius Sports Group is ultimately a data and information business. What they do is they provide official data and information on sports events, both live and historical, to its customers who are primarily gambling companies and gaming companies. It's not a gambling company itself, it just partners and it provides the data which a lot of gambling companies rely on to run their sports books. Ultimately what they do is they acquire rights for sporting events from the rights holders. In most cases these rights are exclusive, and what they do is they enable Genius Sports to be the official data provider. Genius Sports then analyses these events, takes the data from those matches and provides it to its customers. These customers use the data from Genius Sports Group to enable them to run their sports betting books. This really is mission critical for its customers. Without the data, without the analytics, they would not be able to run their sports betting books in the same way. Now Genius Sports Group covers over 240,000 sporting events and has its own dedicated team of 7,000 data analysts who take the data from those sporting events and manipulate it in various ways that are useful for its customers. Now as we currently understand it, the merger is set to complete in Q1 next year, and personally I think there's a lot to be excited about here. So what are the positives? Now this really is mission critical for its customers. Without Genius Sports Group's product and data, they would be unable to offer sports betting in the same way to their customers. If they want to carry on operating as they are, they need to continue to have that data supply. The B2B dynamic here, combined with the mission critical nature of this product, ultimately means the demand is entirely non-discretionary. The data is very embedded in its customers' workflow, and ultimately that means it's very hard to switch it out. Ultimately it's absolutely essential. What's more, as part of this, there's great visibility. Now over 60% of the revenue which Genius Sports Group generates is contractually guaranteed. And what's more, a lot of these contracts are multiple year contracts, 4, 5, 6 year contracts with their customers. That gives great visibility, great certainty, and great resilience. If you've seen any of my other videos, you'll know personally how important resilience is to me. Across economic cycle, it's proven that the most resilient businesses are those which outperform the market. And so personally, that really excites me here. Next up, we should talk about the real high growth potential in the market. Now, Genius Sports Group is very well established in the UK and in Europe and in many other established gaming markets worldwide. However, as we know, the US market is opening up to sports betting and opening up to online gaming. Currently in the US, 19 states allow online sports betting, and Genius is really well positioned. It's active in 10 of those, and for the remaining 9, it's well positioned to soon be operating in those. What's more, the expectation is that many more states will open up to online gaming, whether sports betting or sports and online casino gaming. I've touched on it in other videos before, but there's a real economic rationale here. States are in difficult financial positions, and allowing online gaming enables them to generate a new stream of tax revenue. This is much more popular than raising tax rates on existing taxes when states need to increase their revenues. So ultimately I think that we're going to see more states allow online sports betting, and as such the addressable market for Genius Sports Group growing, and that's really exciting. The next thing I like is the barriers to entry. Genius Sports Group has IP and has technical know-how which are really hard to replicate. Additionally, to be effective in this market, you really require scale. It's really hard for small companies to compete in this market, which again as an investor I like to see. What I also like is that there's a strong value proposition for everyone in the value chain here. What that means is there's a real need for Genius Sports Group to continue existing. It's not going to be swapped out or replaced with something. For the sports themselves, they generate revenue from this, and additionally they need this data. For the betting companies themselves, they need this data for them to be able to run their sports books. Additionally, the more data they have enables them to offer more products, allows them to generate a greater ROI, and ultimately benefits them financially. The next positive I see is actually the diversification the company has. It's not overly reliant on one single sport, one single customer, one single contract. And again, that just provides a greater level of resilience. Now next up we need to think about the competitive landscape, and there's a number of positives that come from this, but as well some concerns that we should definitely think about as well. So firstly, there's only one real other competitor of meaningful scale in the market, and that's Sportsradar. Yes, there are other companies that operate in the same space, but they don't have the same scale and they don't pose much of a threat. Ultimately, the reason it's harder for these smaller companies to play in the market is that actually they can't compete for the acquisition of rights, and they don't have the same scale that they can't command the same pricing with their customers. This fragmented nature of the market does also present some opportunities in terms of acquisitions. What it does is it enables Genius Sports Group to go on a multiple arbitrage-led value creation exercise. Now, let me explain that if that sounds like double Dutch to you. Ultimately, you can acquire these smaller companies and increase the value of your overall company disproportionately so. Let me talk you through an example. Let's use a fictional example here. Let's say a company is generating 10 million in sales, and that company can be bought for 2 times its revenues. A fair valuation for a small company like that. That company can then be acquired by Genius Sports Group. However, Genius Sports Group is valued at around 7 times its sales. Ultimately, what that means is when those revenues are consolidated into Genius Sports Group. By using this example, what we've done is we've increased the value of the company by 70 million. However, that's only cost 20 million. So ultimately, the arbitrage opportunity here is the 50 million. Now, this is fairly common in highly fragmented sectors, but it's a real opportunity here. However, there's also the opportunity to benefit from cost savings. So when they acquire that smaller business, there will be overlapping cost items. For example, people doing the same roles, they'll be paying for subscriptions and services that do the same thing within both businesses. And when you merge the two companies, you can eliminate those costs. Those synergies, again, drive more value. The next thing we should definitely talk about, which has both positives and negatives, is the valuation, and the valuation versus its peers. So yes, if you look at the market currently, and you look at the proposed valuation of DMYD, it is trading at a discount to some of those peers. So yes, the argument here is that actually the company is undervalued, and once the merger is complete, the company is trading on its own ticker, and all the investors who can't invest into SPACs but want to invest into DMYD can, that should uplift the valuation. So yes, I buy that. And especially when you look at the list of comps outlined in the investor presentation, you can see that those which trade at lower multiples are those in traditionally slower growth markets. So you definitely could argue that DMYD should be trading at a premium end of that. However, there's definitely something here which maybe isn't as positive and perhaps is a cause for concern, but we will discuss that in a moment. So what are the main negatives then? So firstly, I think we need to talk about the health crisis and the potential risk that has on the business. Now, at the start of it all, we did see a massive disruption to live sports, and ultimately that did have an impact on the business, a negative one where sports weren't taking place and they couldn't provide data to its customers. There's definitely a potential for further disruptions as it continues. However, I do see some mitigants against this. Yes, whilst the headcount physically attending games may have decreased, sports events are returning and are continuing to occur, and that's ultimately the important thing here. So ultimately, I don't feel that that's a massive concern anymore. However, it's definitely something we should keep our eyes open to. So next up, we need to talk about why actually there are risks of the fact that it's just a two-horse market primarily. So yes, there are positives, however, there are negatives. Sportsradar, its main competitor, is actually owned currently by a growth fund in Silicon Valley and a Canadian pension fund. Both those financial buyers have deep pockets and, if they wanted, could cause some disruption in the market. What we could see, for example, is more competition between both these players for the exclusive rights on certain sports. What that would do is push up the price and ultimately erode the margins that companies could generate. Now, we have seen this phenomenon before. A good example of that is in the English Premier League, the football or soccer, where ultimately people were competing for the exclusive rights of televising the football. What ultimately happened is that prices got bid up massively, and ultimately these companies couldn't generate the same margins that they had generated before. However, a mitigant I do see against this is the fact that this is B2B facing rather than in that example where the ultimate customers of those bidding for the television rights were consumers. The fact here that ultimately the customers are gaming companies, and that ultimately it's mission critical and it's non-discretionary, there is the potential likelihood here that actually any incremental costs from acquiring those rights could be passed on to the end customer. So whilst this is an area I want to do more diligence on and understand better, it's not something I'm unduly concerned by at this point in time. Now, the next thing I think we should definitely touch on, again, which I mentioned as a positive, is the valuation, but there are also some negatives or some concerning pieces around this. So as we touched on before, Sportsradar about 2 years ago went through a transaction. Its existing private equity investor, EQT, sold their stake, and in came a Silicon Valley growth fund and also a Canadian pension fund. Now, ultimately, at the point of this transaction, Sportsradar was valued at around 7 times its revenues. Now, this is an important data point. If we compare that to where Genius Sports Group is currently valued, that's very much in line. Does that perhaps mean there's not the same potential for valuation uplift? This is something that I'm still doing my work on and still trying to understand more. However, the mitigants I see at the moment are the fact that actually we've seen massive growth in the market in those 2 years. The prospect of growth in the US has become much more real, and ultimately if you look at valuations in public markets everywhere, they've gone up. They've been driven up by the decreasing interest rates. So again, I'm not too concerned by this at this point in time. However, it's something I'm doing more work on. If that transaction was to happen today rather than 2 years ago, I do think that multiple would be a lot higher. So ultimately, I do feel there still is that potential for valuation uplift. However, it's definitely something that we as investors need to be aware of. But look, thanks so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new and you like investor related content, then subscribe to the channel. And as always, please let me know your thoughts in the comment section below. I find it so interesting to hear everyone's views and perspectives, and there's always some really great debates going on there, so please get involved. But thank you so much for watching, and I'll see you in another video.